Okay, so let's have a look at the third adjustment then for Lincoln 2011 company accounts. So the cost of delivery vans is to be written off on a straight line basis over 5 years. A full year depreciation to be charged in the year of acquisition, so when we bought it, and none in the year of disposal when we sold it. Delivery vans have a scrap value of 5% of the original cost. So this is a little bit different from the way we are used to doing this question. So it's telling us here that delivery vans are to be written off over 5 years. So we're going to have the delivery vans for 5 years. We're going to have a full year's depreciation when we buy it, but none when we sell it. And then at the end of the 5 years, each van is going to have a scrap value of 5% of the original cost. We need to calculate how much that is. So the first thing you're going to do is you're going to open up your three accounts. So you're going to have vans, then you're going to have your cumulative depreciation, and then you're going to have your disposal to see if you made a profit or loss. Let's fill in the information that we know. So the vans cost 155,000, so that's going to go on the debit side. So 155,000. The difference between the two, so the value is 120 and 155,000. So that balance credit is going to be 155,000 minus 120,000. It's going to give us the cumulative depreciation of 35,000. So that's the information we know so far. In the question then it tells us that during the year a delivery van which has cost 25,000 in 2016 was traded in for 14,000 against a new van costing 40,000. So we got rid of a van of 25,000. So we need to reduce our vans by 25,000 because we don't have that anymore, and that goes into your disposal. So you're going to credit your van account of 25,000. You're going to debit your disposal account of 25,000. And then to finish off your vans account, we've got a new van of 40,000. So we're going to increase our van, so the increase in asset goes on the debit side by 40,000. And then you can balance it off to find out the figure that goes into your fixed assets. So the figure for our fixed assets is 170,000. So the balance 170,000, and that goes into your fixed assets in the balance sheet. So now in our cumulative depreciation account, we need to find two figures. One, we need to find a figure for the cumulative depreciation for the asset that we just got rid of, that 25,000, and we need to find the profit and loss figure for all the vans that we have to put into our profit and loss in our administration section of that account or that statement. So first we need to do this 25,000. In the question it says that it's got a scrap value of 5%. So we're going to multiply that by 5% to see how much that scrap value is. So 25,000, multiply that by 0.05. So that gives us 1,250. So the value that we're going to use to calculate depreciation is going to be based on this 23,750. So that's the figure that we're going to use to calculate our depreciation on this disposal of the van that we just got rid of. So in the question it says that we're going to have the vans for 5 years. So this 23,750, we're going to divide it by 5 to see how much the depreciation is per year. And that's going to give us 4,750. So we bought the car in 2016, or the van in 2016. It's now 2019, so it's 3 years. But remember that a full year's depreciation is to be charged in the year of acquisition and none in the year of disposal. So we're only going to multiply that by 2. So for 2017 and 2018. So it's only 2 years depreciation. So we multiply that by 2. And that's going to give us the depreciation on our car that we just sold. So this car, our van disposal, is going to be 9,500. So we're going to debit our accumulated depreciation account. We're going to credit our disposal account. 9,500. So remember, with this a little bit different. So it's telling us this van, 25,000, it's going to have a scrap value of 5% at the end of its life. So when we get rid of it, it's going to have a value of 5%. So that's 5% is going to be 1,250. That's the value of the car we're going to have when we get rid of it. So what's left then is what we're going to calculate depreciation on, which is 23,750. That value of that 23,750, we're just going to have the van for 5 years. So you divide it by 5, you're going to find out how much you're going to depreciate by each year, because at the end of that 5 year, they want the value of the cars to be 0, taking this 1,250 out. So the depreciation per year is going to be 7,000 or 4,750. We're going to have it for 2 years because it says in the question on the year disposal, from the year of acquisition to the year of disposal. So when we bought it, and not at the year of disposal. So we bought in 2016, so 2017, 2018. So we don't need it for 2019. Or sorry, we have it for 2018. Sorry, so we have it 2016 and 2017. We don't need it for 2018 because that's the year that we got rid of it. So you only need it for 2 years. So 2016 and 2017 is what we multiply by 2. So that's going to give us 9,500. So you're going to debit your accumulated depreciation account and you're going to credit your disposal account. So that's the first figure that we found out, how much accumulated depreciation for the van that we sold. Then we need to find out the profit and loss figure. So what is the depreciation that we're going to put into our profit and loss as part of administration? So our total figures, our total value of our vans is 170,000. So once again, we multiply that by 5% because we want a value of it, a scrap value of 5% at the end. So 170,000, 8,500. So the value that we're going to use, or the figure we're going to use, is going to be 161,500. That's going to be divided by 5. So 33,200 or 32,300. So that's going to be our depreciation figure for this year. So 32,300. So that figure there is going to go into your profit and loss in your administration. And then we're going to find out how much is the accumulated depreciation that goes into your balance sheet. So it's the difference between the credit and the debit side. So the balance is going to be 57,800, and that's going to go into your balance sheet as a fixed asset. So the two figures down for the accumulated depreciation, the depreciation for this year, 33,200, and the balance sheet figure, then the fixed assets, 57,800. And the last thing to do is find out whether you made a profit and loss on the disposal. So we got a trade in for 14,000. So the trade is going to be good 14,000. So the value was 25,000. That's how much the cost is, or how much it's worth. So it's worth 25,000. We didn't get that 25,000 back, so we only got 23,500. So there's a difference then. So that difference then is our loss because it's on the credit side. So when we bring that down to our trial balance on the debit side, it'll be an expense. So we made a loss of 1,500. So that 1,500 is going to be in your profit and loss. It's going to be underneath your selling and distribution. So that loss that we have there, so that 1,150 goes underneath selling and distribution. So a little bit differently from what we've done previously in relation to this account. So let's see. So selling and distribution, and the same up here as well. That should be selling and distribution as well. It's a little bit different. So the vans calculate fairly straightforward. We would have done that before. Your cumulative depreciation is different because it's based on the value at the end. So it's a 5% scrap value. So you need to find out how much the scrap value is going to be. That figure we calculate is going to be reduced by the number of years that we have it for, which is 5 years. So 4,750. So we only have it for 2 years, so 2016 and 2017. So we don't need it for 2018. So we only multiply it by 2. And the same then for the depreciation for this year that goes into your selling distribution. The value of our vans are 170,000. Scrap value 5%, so 8,500. So 161,500 is the value that you're going to use to calculate the depreciation for this year. So you're going to divide that by 5, which gives you 32,300. And then the disposal then is going to be a loss of 1,500. And the last part then is the purchase of the car. We put into purchases, so we need to take that out of purchases. So the trading value was 14,000. It cost us 40,000. So the check that we paid for it was 26,000. So we need to reduce our purchases by 26,000, and we have a working for purchases. So we go back, there's your purchases there. So we have 100 or 1,038,000. So the amount. So then we're going to reduce that then by the check. And that check then is 26,000. So that's going to be your new figure then. So 1,012,000 is going to be your new figure. That's going to go into your trading account in the profit and loss. So once again, your depreciation of your vans done a little bit differently. So it's going to be still your vans, your cumulative depreciation, and your disposal, finding out the value for your vans, for your fixed assets, the cumulative depreciation for your balance sheet, the profit and loss for this year, profit and loss for your profit and loss account, we made a profit and loss on it, and then your trading figure then to go into your profit and loss account in your trading section. And that's working 3 answered.